Hello ladies and gents, Lex here, and today we're discussing a topic, or rather a question that I get asked quite often from beginners, and that is, Lex, please tell me about safer investments that I can start with. Now I have a favor to ask you before we start. If you enjoy the content that I'm putting out, a like really helps the channel and I would appreciate some feedback or a comment as well. And that's it. Let's get to it. In short, are there any safe investments? I would say no, not really. If anyone is trying to peddle you something that he claims is 100% risk-free, chances are he's lying. He's full of shit and he's trying to swindle you. Because return is pretty much always directly one-to-one correlated with risk. So if something has a chance to give you a 50% return, then there is a 50% risk somewhere there, whether or not the person selling you that product is disclosing that risk. So, safe investments. In times of turmoil, and now with the situation going on in Ukraine, people are looking for safer places to stash their cash. The traditional one, of course, gold, everyone's favorite safe haven, is, well, how should I put it? Not as safe as people would like you to believe. If you look at the chart, 20-year chart, for example, for gold, you will see that there is a period pretty much starting from 2011 until 2020 where you would have not made any return. In fact, you would have been negative. That's a period of nearly 9 years where that safe investment has not only not made you any money, it has most likely lost you money. Even proponents of gold usually do not advise that you have more than 5 or 10% of your portfolio in gold. And that should tell you something. If someone believes in their investment so much, then usually they have no problem having large amounts of exposure to that investment. But in gold, that's not the case. And with gold, there are many risks which people do not know about. For example, if you have your gold in physical bars or coins, you need to store those. If you're storing them at home, they're at risk at being stolen or lost. If you're, for example, if you have a fire in your home or something happens to your home, you risk obviously losing those gold bars. If you're storing them in a vault, you have to pay insurance, you have to pay storage fees. There are fees associated with storing gold, and the inconvenience of having to actually store it is an additional risk in itself. It's not very portable, it's not very usable. If you have to travel with gold, that presents an additional risk. There is a probability that, for example, the government in your country might decide to seize your gold. If you have it in a vault somewhere in a bank or something, it can be seized. That has happened historically in Germany and as well in the United States. When they move off the gold standard, people were required to hand over their gold to the government in exchange for cash. So I personally do not have any gold. I do not believe in that asset class. I had some in the past, I sold it. Gold is essentially only a good investment in times of conflict and turmoil, in times of uncertainty. But whenever the economy and the world is going well, gold tends to underperform quite a lot. From 2011 until 2020, the economy has been doing quite well, and that's why gold has been going down while everything else has been going up. And buying gold now is probably the silliest thing you can do, because your downside risk is a lot more than your upside risk. Meaning that the likelihood that gold will go down from here is much higher because it is at an all-time high. The upside potential from here, going up from an all-time high, there is a lot more resistance. It's a lot more difficult than coming back down. All-time highs are hard to reach. So you buy now. Your downside is maybe 50%, for example. Your upside, nobody knows, maybe 20, 30%, let's say. So when you're evaluating whether an asset class is risky or not, that's mainly what you should look at. Downside risk versus upside risk. For example, some of the cryptos right now, if you look at altcoins, Some of the investors, what they have been doing is they have been buying altcoins which have gone down by 90%, 80%. Those things have pretty much reached the bottom. Going down from there would be very, very difficult because there's a lot of resistance. That's why there is the old saying, buy low, sell high. When you buy low, you're buying an asset which used to be expensive. For some reason it came down in price. You can buy it cheaper and then you can sell it once it comes back up. Instead of buying it high when it's at an all-time high price like gold. And then when it starts to come down, because it will at some point, you start panicking and you sell low. You do the opposite. Number 2, property. Property is also considered a generally very safe investment. Having an apartment, a house, or land is considered safe. However, you need to consider that in a situation like the one that we have in Ukraine, if there is a natural disaster of some sort, your property can essentially become absolutely worthless and unsellable. Not only that, it can become destroyed. For example, if you have an apartment, say the block burns down or something happens. If you're not insured, you've basically lost your money completely in an investment which is traditionally safe. And the illiquidity of property, meaning that if you decide to sell it, it can be difficult to sell, it takes time to sell, presents an additional risk when investing in property. Similarly, like the case of gold, your property can actually be seized, which of course again presents another risk. And like I said, in case of war, even though your property might not be destroyed, it can essentially become impossible to sell, making it very, very risky. Okay, crypto, everyone's favorite asset class. Probably the most risky one, and people mostly understand why. That is because of the volatility, but it's not just the volatility. There are many other factors which make crypto risky. The main one being that it's very prone to hacks, meaning that if you get scammed by phishing, your crypto portfolio can be gone in seconds, the whole thing, because somebody stole it. Platforms get hacked, tokens get stolen. That is the main risk in crypto, other than the price volatility, obviously. And of course, if you do not have access to the internet, for some reason it goes down, then your crypto is pretty much useless. You can't use it for anything. You need at least a phone and internet to use crypto. So those are also risk factors that should be thought about, because again, I'm making parallels to the situation in Ukraine. People there, some areas do not have internet. And that means that if someone had invested in crypto, they cannot use it at this time. And this is a time where they might need it urgently to pull out some money. They can't because, well, no internet. With stocks, the risks are, well, fairly well known because that is the investment of choice for most people. But still, political, market, and economic risks are the main ones there. Regulations can bring companies down, or it can do the opposite. Of course, that is why diversification is a very important thing for your portfolio. That is why I keep coming back to this, because each and every asset class has a lot of downsides, it has a lot of upsides, and you need to combine them in your portfolio in such a way that one asset class makes up for the weaknesses in another asset class. And of course, that entirely depends on your goals, that depends on your situation, that depends on where you live, that depends on how you see your future, that depends on what you're working, that depends on how much money you have to spend, how old you are. There are so many factors that have to be considered when you're trying to evaluate what is a safe investment for you, what is a safe investment for your portfolio, and how you manage risk. Because at the end of the day, I've discussed this before, but for some people, what is risky for others is safe. For example, there are people who understand crypto incredibly well and make a lot of money in crypto. That means that for them, crypto is actually safer investment than gold or bonds. because they lack the understanding and the knowledge to invest in gold or bonds, which means that from their perspective, investing in crypto is the best thing that they can do. So it entirely depends on your skill set, on your needs, on your desires, on your goals. And of course, if you are very young, for example, 20, investing in crypto, investing in stocks, in generally picking riskier investments is much more okay for you because you have such a long time frame for your investments to play out in your favor. If you are 50 or 60, then you need to be even more careful how you pick your investments, how you structure your portfolio. Even if you are looking at alternative things such as, let's say, artworks, even those have very big benefits, they have very big downsides. Again, similar to gold, it's a physical product. Moving it is difficult. It can get stolen, it can get damaged. You need to be considering those things if you plan on investing in that category. Let's look at a hypothetical situation. You are an investor in Ukraine. If you've had property or if you've had a business there, then chances are you've pretty much lost everything, or if not everything, most of your net worth. However, if you are another investor also in the Ukraine who has mainly foreign equities in Europe or the US, you've lost a lot less. However, if you do not have anything at home to barter or trade with, if you do not have a little bit of gold or a little bit of cash, then getting out of the country can actually be difficult. So that's why a diversified investor in Ukraine, let's say, could have had a little property. He would have lost there. If he had an equal amount in shares, that part of the portfolio would have been fine. If he had a little bit of gold or a little bit of cash, that part of the portfolio could really actually save his life right now. So each of these components in his portfolio have performed differently, and generally such an investor would be fine. However, if that person was 100% invested in his business or in his property, then he's pretty much burned out. That's why it is very important to be diversified, to have some foreign equity, to have some foreign ETFs, to have maybe a little bit of gold if you are in a risky area, but also bearing in mind all of the potential risks that each of those asset classes has. That's why I say that it depends entirely on your situation, on your personal preference. So when somebody asks me such a question, what is a safe investment? I will ask you questions about you. How old are you? What do you do? Where do you live? What are your values? What do you think is useful in the world? These are all questions so I can evaluate potentially what is appropriate for you to invest in, because everything is relative. Let's say going to the gym, for example. A training program that works for one person does not work for another. Same goes for the diet. A low carb diet might work for one person and the other might feel like complete and utter shit. What people need to understand is there is rarely a one-size-fits-all approach. Evaluate what is okay for you, or find someone who can help you with tailoring a custom portfolio for you. One which you feel safe with, one which you feel okay with, one which you feel protects you from as many eventualities as possible, or at least one that you feel like you understand. Okay, well, that's it about discussing safe investments. Like I said, it's very difficult to say exactly what is safe. That is different for each and every person, because each and every person defines risk differently. Thank you so much for watching, and I'll see you next time. Bye bye.